Hi everybody, welcome back to CPA Talks, your landing page for everything about accounting and audit. In today's video, we are going to explain how to perform test of details for property, plant and equipment as part of your financial statement audits. We are not explaining it theoretically, but we have a working paper template in which we will show you how to document your test of details. In this working paper, we will explain to you what are the risks material misstatements that you can identify, what are the relevant assertions, and what are the procedures that you need to perform, and how to perform each procedure. Before we jump straight into the business, let me tell you that you have a chance to get a copy of this working paper through the link provided in the description of this video. So don't miss this chance and get your copy now to use it going forward in all your audits. So now let's stop talking here and let's see how to perform the test of details for property, plant and equipment. Okay, so let's see how we will perform test of details procedures for the PP&E or the property, plant and equipment. So this is like just an intro tab about the working paper template. So let's move on. So in this tab, it is called the recap tab. You can call it whatever you want, by the way. So you can call it summary tab. So this tab serves as an executive summary for your audit manager or the audit partner or whoever is going to review this working paper. So it will explain to them what client you're working on, what are the accounts that you're testing in this working paper, what are materiality levels that you have used, what are the risks that you have addressed or identified, and what are the relevant assertions, risk levels, what are the test of details procedures that you have performed, and then where you have performed each test of details procedure, and what are the conclusions that you have achieved out of this working paper. So it serves as like an executive summary for whoever is looking at this working paper. So whenever they open this working paper for the first time, they don't need to go to the details of each tab. They just look here and they will figure out what you have done here and what conclusions you have reached. So let's now look at the risks that you identified, but before moving to the risks, just to emphasize again, you need to have all the information about the client. So here's the client name, year end that you are testing, what is the account that you're testing, property, plant and equipment, period end balance, what is the balance of the account that you are testing. So this is a hypothetical figure, and what is your control reliance approach, whether you are relying on control or not. And then the materiality levels that you're using, overall materiality, performance materiality, and CTT, which is clearly trivial threshold. So this basic information needs to be there in any working paper that you're going to document on any audit file. Then if it is a test of details working paper, then you need to document what are the risks that you identified and the relevant assertions, risk levels, and procedures that you have performed. So in the PP&E, we have like example risks that might be there. In most of the cases it will be there. So these are common risks that are always there. So as an example, we have a risk that says that PP&E recorded at year end doesn't exist or incomplete. So this is a risk that is addressing the existence of the fixed assets. So it means like the company might record or disclose that they have some fixed assets at the year end. However, these fixed assets doesn't really exist in the real life. So that's a risk addressing the existence. And then another risk, which is we can cover in the same testing, which is PP&E disposals have been recorded for items that were existing at year end. That means that the company might have taken out some of the fixed assets from the balance sheet. However, these fixed assets are still existing. So this is a risk that addressing the completeness. So now you identify the relevant assertions, you need to determine the risk level. Again, as we said before, risk levels, it depends on which firm that you're working for, which audit firm you're working for. Some firms, they have 3 levels, which is significant higher or lower. Some firms, they have more levels than 3. So this is just like for you to determine which methodology that you are following, and you need to document here the risk classification. And then here you need to document the procedures that you're going to perform in order to cover this risk. So as an example, for these 2 risks, we are going to do physical inspection. So we will do in two ways. The first one is that we will select samples from the PP&E items that physically exist, and then we will trace these items back to the PP&E register to make sure that it is recorded. So that will cover the completeness, which is the second risk here. And then the other procedure that we will do it the other way around. So we will select samples from the PP&E register, and then we will physically inspect these assets to make sure that they actually exist at the year end. So this will cover the existence. Let's look at the other risks that we have here. So we have a couple of risks that are addressing the existence, rights and obligations, valuation and allocation, and rights and obligations again. Like this risk says, PP&E additions recorded during the year don't exist or have been incorrectly capitalized. Another risk that says that PP&E additions recorded during the year were valued incorrectly. So as an example, you might have purchased PP&E like a fixed asset, and you incorrectly entered the value of the asset, maybe due to error or fraud. It could be like for several reasons, but that's risk that you have identified. Also, there is another risk that says the entity doesn't have the rights to the PP&E additions recorded during the year, and the sale, disposal, or theft of PP&E has not been recorded. So there might be some assets that has been disposed, but the company has not recorded the disposal for that for these assets. So here are the relevant assertions. Again, you need to determine the risk classification, and then what procedures we are going to do here. So we are going to do two sets of procedures. The first step is that we will select a sample of the items added during the year. Maybe we can look into the PP&E register and we can see what items has been added during the year, and then we select sample of these. And for each selection, we need to obtain audit evidence and determine if the selection is a valid addition to the PP&E and record it appropriately in the current year. So this is the first set of procedures. Then the second set is that we will select sample of items disposed during the year, and this is also we can get from the PP&E register. And for each selection, we need to obtain audit evidence and determine if the selection is a valid disposal from the PP&E and record it appropriately. Then let's move to the next risk. We have a risk here that says PP&E additions made during the year were not recorded. So that's also regarding the completeness. So that means there might be some additions that happened during the year that has not been recorded. By the way, this is a tricky one. It's not tricky in itself, it's just tricky on how we are going to address this risk. So this risk is relevant to the completeness. So let's think about it. If the company had some additions and they don't record it in PP&E, so where do you think they might have recorded it? In most of the cases, they might have incorrectly recorded these as part of the repairs and maintenance expenses. So like a company might have done like a major overhaul to like a big machine they have, and they recorded this overhaul as an expense rather than capitalizing it as per IFRS or whatever the accounting framework that you are following. So in that case, in order for us to address this risk, what we are going to do, we will select sample out of the transactions in the repairs and maintenance expenses. So see, although we are testing the PP&E, but we will go and select samples from somewhere else, like an income statement account, like the repairs and maintenance. So why we are selecting the samples from this account? Because for each selection, we will obtain audit evidence and determine if the selection is a valid expense and doesn't represent a capital expenditure. So by this, once we confirm that repairs and maintenance are actually expenses that should be expensed during the year, that means that there are no capital expenditures that has been incorrectly recorded in this expense account. So this will cover the completeness of the PP&E for this specific risk. Then we have a risk also regarding the depreciation on PP&E. So it might not be recorded or recorded incorrectly. So how we are going to do this? We will review the client's depreciation method, to evaluate whether it is in accordance with the applicable accounting standards or framework that you are following. And then we will examine the useful life of the PP&D to evaluate whether the client estimates it reasonably, maybe by comparing it with the client's competitors or the industry standards. And then we will perform recalculation on the depreciation for the PP&E. Then let's move to another risk is regarding the impairment indicators. So it is indicators for the PP&E, but the company didn't account for or didn't assess properly. So in that case, we will obtain the management's assessment for the impairment indicators and examine the assessment for reasonableness. This assessment is like a central audit procedure that needs to be done not just for the PP&E, it should be done for the whole company, like in terms of identifying the cash generating units and making sure that there are no impairment indications, and if there are impairment indications, we need to do more assessment in terms of whether there is an impairment or not. But we are covering here from the aspect of PP&E. So as you can see, these are the list of risks that we have identified, and these are the procedures that we are going to perform. And now we have a column which will direct us to the respective tab of each test. So let's start with the physical verification, which will cover the first risk. So in this tab, we will again document the risks, assertions, classification, risk classifications, and procedures that we are performing in this tab, and the conclusion that we have reached. And then once you have done this, you need to document your sampling procedures. So sampling is not like a standard procedure, or like there's not like one way to do it across all entities or across all audit firms. So sampling is one of the areas that requires professional judgment. So the standard didn't tell you how to do the sampling in specific steps. It just gives you like the thought process that you need to follow, and then each audit firm, they have their methodology in determining how they can select the samples. So I'm not going to cover the details of how to select the samples because it depends on which audit firm you are working for, but I'm just covering here what information that you need to document in the working paper related to the sampling procedures that you have followed. So as an example, in each working paper, in each test, you need to document what is the population that you have used for the testing, which in our case it is PP&E register. And you need to document the population amount, and you need to document where you have attached this population on the audit file. By the way, some audit firms as well, they just instruct you not to document or not to attach or retain any like breakdowns received from the clients or something like this for confidentiality reasons. But some other firms, they ask you to document it. So again, it depends on which firm you're working for. And then you need to document what performance materiality level that you have used in the sampling procedure, what is the clearly trivial threshold, risk level, control tolerance, approach, and then the sampling method that you have used. So there are a couple of sampling methods that you can use out there. Some of them maybe monetary unit sampling, systematic random sampling, and some manual random sampling. So there are a lot of other examples of sampling methods that you can use. Again, it depends on the audit firm that you're working for. And then what is the sampling unit that you're using here, and the sample size, and like the extract of the sampling report. So some audit firms, they use like a specific software for sampling, which will generate a report of the sampling procedure that you have done. So if your audit firm has this software, so you need to get this extract and make sure it is documented on file, because this will be the evidence on how you have selected the sample. So once we are done with the sampling, then we need to look at the IPE. IPE again is the information provided by the entity. So information provided by the entity is any information that you're going to use in your audit test. So these information are provided by the entity. So before using them in the audit test, you need to make sure that they are accurate and complete. So in our example of physical verification as an example, we are going to use two IPEs. The first one is the fixed asset register, which is a register of all the fixed assets that the company have and the movement on them during the year. And we will use the floor plans and site maps indicating the location of the PP&E in order to select the samples for the completeness test. So these are the two IPAs that we're going to use, and then we will need to do accuracy testing and completeness testing for them. So as an example, for the fixed asset register, we will need to recompute the net book value for the sample of asset to test the accuracy of the amounts, like the amounts on the register itself. And then we need to agree asset cost details for a sample of additions and disposals, which we will be already doing in the additions and disposals testing. That's why we are saying here refer to tab additions and disposals. So by performing these two procedures, we are covering the accuracy testing for the fixed asset register. Same thing, we need to make sure that we do completeness testing for the IPE. So as an example, we will reconcile the total cost and accumulated depreciation per the fixed asset register to the general ledger and trial balance. So this is like an example. If you look here, I just attached here like an example of fixed asset register, how it should look like. Obviously this is just an illustrative example, so no figures here. I'm just giving you an example. So when you go to your audit client, you know what you expect to see when you ask for the fixed asset register. So let's go back to our tab. So now we will assume that you have done the sampling and you have selected one sample for items from the PP&E register and one sample for the items from or that physically exist from the client site. So for the items that you have selected from the PP&E register, your goal is to make sure that these assets are really existing. So what you're going to do is you're going to do physical verification or physical inspection. You will ask the client to show you where this asset, and you will need to see this asset yourself. So by this procedure, you will make sure that the asset exists and that the asset is in a good condition. Okay, so that will cover the existence of the assets, and then for the sample that you will select for the PP&E that physically exists, so this will cover the completeness. So basically you are selecting assets from the floor and you making sure that these assets are really recorded on the balance sheet. So you select your sample and then let's assume that you have identified only one sample to be tested. So what you're going to do, you are going to see this asset in front of you, and then you will ask the client to show you where this asset has been recorded to the asset register. So you will trace it to the asset register. By this procedure, you will make sure that it is recorded in the register and it is in good condition. So by this, you have covered the first couple of risks that we have identified here, which is regarding the existence and completeness of the assets recorded at the year end. If you are still watching this video until this point of time, that means that you're really interested in financial statement audits. So let me share with you some exciting news. You have a chance now to get a copy of my recent book, Audit 101, through the link provided in the description of this video with a very good price. This book will explain to you the financial statement audit process from start to end, from accepting the client until issuing the audit report to the client, with real-life examples, easy to understand language, and extracts from the international audit standards. Don't miss out on this chance and get your copy now. Okay, so let's now move to the other test, which is testing the additions and disposals. So if we go here, again, you need to put the risks, assertions, risk classifications, procedures, conclusion. Again, you need to do the sampling procedures and you need to document it properly here. By the way, here you will do two sampling procedures. You will do one for the additions and one for the disposals. So you need to make sure that you document it properly here and you make a proper segregation between the two sampling procedures. Then again, you will have IPE that you're going to use here, which most probably will be the fixed asset register again. So you will do the same accuracy and completeness testing to make sure that the fixed asset register is accurate and complete. And then you will select sample of the additions and you will select sample of the disposals. For the samples from the additions, you will make sure to document the category of the asset number, which should appear on the fixed asset register, the asset name, the date of the addition. All this information, by the way, you are getting from like the part here, this part, you're getting from the fixed asset register, and you will see how to verify it. So you are getting these information: date of addition, recorded amount, date put in use. This is very, very critical one, because you might get some assets in a date, but these assets were not ready for use until another date. So they should be they should be ready. They should be capitalized when they are ready for use. I mean, like the depreciation calculation should start when they are ready for use. So you need to make sure that the date put in use is the date that you use for the capitalization. And then if there are any residual value, and then how you are going to verify this, you're going to ask the client to give you like an invoice or any supporting documents for the purchase of this asset, basically. So let's say that they give you an invoice, so you will document the supplier name, the invoice number, the invoice date, the invoice amount, and then might be this invoice amount in different currency, so make sure to document it in the original currency, and then to use the proper exchange rate. So in our case, it is in the same currency that the company is using, so the exchange rate is 1. And then calculate the amount in the presentation currency that the company is using, and then compare this amount that you have calculated against the amount that the client has recorded on the fixed asset register. This amount. So you have found a zero difference, so that's fine. So now your conclusion should cover whether the amounts reconciled, whether it is a capital expenditure, and it is added in the correct period. So these are the 3 questions that you need to ask yourself when you are testing additions. Now let's move to disposals. Again, you will select a sample. These information are all from the fixed asset register. It is will cover the GL number, the GL name, the asset disposed, the fixed asset cost, like the asset cost originally recorded for this asset, and net book value at the start of the year, date of disposal, useful life, 10 years in this example, and then the residual value, if any, and accumulated depreciation at the date of disposal, and net book value at date of disposal, and the sale price. So all this information you are getting from the client, like until this point, until this point, you're getting from the client, from the fixed asset register, and then the supporting document that they will give you, it should show the sale price. So maybe they have sold this asset with a sales agreement. So in this agreement, you should find the sales price, and you should document what kind of document that you have used. In our example, it could be the case that it is a sales agreement, and then you should recalculate the gain or loss on the sale of this asset. So the gain or loss is the difference between the sale price and the net book value at the date of disposal. So once you calculate the gain or loss, you need to compare it with the gain or loss that the company has recorded, and then find the difference. It is zero difference in our case. So the questions that you need to ask yourself here is that does the amount reconcile? Yes. Does this asset has this asset been disposed in the correct period? Then it is yes. So these are the questions that you need to ask yourself. So now you have performed the additions testing and disposal testing. Let's see what other tests that we need to perform in this working paper. Okay, so we have this test of PB&E additions maybe in the year were not recorded. So this is the one for the repairs and maintenance that address the completeness test. Again, same with all other tabs. You're getting all the information about the risk that you are identifying, sampling procedure, and the IPE. In this case, your IPE is the general ledger for the repairs and maintenance expenses account. And to test the accuracy of this, you need to test a sample of these transactions, which is something that we will already cover in this working paper. So the substantive procedures you're going to do in this working paper will accordingly cover the accuracy test of this IPE. Also, you need to do some completeness testing to make sure that this IPE is matching. So, as an example, you can reconcile the total expense as per the GL. So you selected one sample out of the repairs and maintenance. Let's see how you're going to test this sample. So you will see the sample value from the GL, and then you need to ask yourself, does this represent capital expenditure? Your answer should be no, because if it represents capital expenditure, then it shouldn't be recorded here. It should be recorded in the PP&E. So what you're trying to do here is to test the nature of this balance or of this transaction and make sure that it doesn't represent the capital expenditure. So you need to describe the repairs and maintenance expense for the sample that you have selected. You need to inspect supporting document. So as an example, work orders, contractual invoices, etc. And you need to identify the nature of the work performed. So as an example, this is the painting work. So this painting work, what is the expected impact on the asset? So it will be just maintain the existing color. So it will not add any value to the asset. So it is not a capital expenditure apparently. And then you need to confirm here your conclusion of the classification, whether this is capital expenditure or repairs and maintenance. So yes, it is a repairs and maintenance, and your conclusion should cover this question, which is, does this represent capital expenditure? And the answer is no. Perfect. So we have done the completeness testing. Let's see what is our next test. So our next test is depreciation testing. Let's see the depreciation testing. Again, same thing. All risks and procedures documented here, all sampling procedures documented here. IPE, it will be again the fixed asset register and the accounting policy memo describing the capitalization criteria and the estimated useful life, how to estimate the useful life, like the accounting policy for the PP&E that the company is following. You need to test the accuracy of both IPEs and you need to test the completeness of both IPEs. So as an example, we have covered already the fixed asset register, so let's see how we are doing the accounting policy memo. So as an example for the memo, we will read the memo and test it for reasonableness and maybe compare it to the same memo that we have received last year just to make sure that it is consistent. For completeness, we might need to review the board of minutes to make sure maybe that the company didn't change anything in the policy this year that has not been reflected in the one that we have received. So these are some example procedures that you can do in order to make sure that to test the accuracy and completeness of this memo. So you will select a sample of the fixed assets that existed at the year end, and your main aim is to recalculate the depreciation of this asset to make sure that the calculation recorded during the year is the correct amount. So you will get the asset, all this information you will get from the fixed asset register, and what you're going to do is to recalculate the depreciation yourself. So you will get the asset number, asset description, asset cost, the date when the asset was ready for use, any residual value, the useful life the company has determined, and obviously you have covered this by testing the reasonableness of the useful life through testing the accounting policy memo and the depreciation memo method they are using. So in this example, this is straight line method, and then the recorded depreciation, how much they have recorded for depreciation this year on the fixed asset register. Then, based on this information, you do your own recalculation of the depreciation for the year, and you compare it against the one that they have recorded. In our example, we haven't identified any differences, which is brilliant. And now, there's the time to make the conclusion. So the question that we need to answer here: does the amount recorded, is the amount recorded and expected reconcile? So in our case, it is yes. Okay, so that leaves us with the last procedure that we are going to do in this working paper, which is related to the impairment. So let's see what we are doing here. Again, you are documenting the risks and procedures. In the impairment assessment, there is no sampling because basically you are testing the impairment indicators, so you can't select samples of indicators, you test the whole thing. So there is IPE that we have in this example, which is the management's impairment indicators assessment memo. You should get from them the memo. So I have added here as well an example memo that you can get from a company. So this is like a hypothetical example, but it will cover most of. They should. And then you need to test the accuracy of this IPE and completeness. So the accuracy, how you are testing the accuracy, you'll test the inputs and assumptions used in this memo, which is something that we will already cover in this testing. And regarding the completeness, you will need to review the management's indicator assessment memo for completeness of internal and external factors considered as per IAS 36. So IAS 36 is the accounting standard that is talking about the impairment of assets. So in there are some example internal and external factors that any company should consider when they are assessing the indicators. So you need to make sure that the company has considered all the required factors. So by this you will ensure the completeness of the memo. So now we have like an overall or highlight documentation about what procedures that we have performed in this tab. So we obtained management's assessment of impairment indicators for PP&E and the supporting documentation, which is recorded in this tab, the PPC. And then we held a discussion with management and operational personnel to understand the company's operating performance, future plans, industry and economic conditions. Then we reviewed the internal financial information such as budgets, forecasts, management reports and board minutes for any contradictory indicators. And we also analyzed the external market data and industry reports relevant to assessing potential impairment indicators. And then we evaluated whether the procedures performed provided sufficient appropriate audit evidence to conclude on the appropriateness of management's assessment. So as you can see here, the shape of this tab is a bit different to the others. So what we are doing here, we are documenting the internal factors and external factors that the company has followed. And so these are the internal and these are the external. And this is the PPC assessment. PPC, by the way, I might have missed to say what is meant by PPC. PPC means prepared by the client. So this is the assessment prepared by the client, and these are the summary of the procedures that we have performed, and these are the conclusion. So for each assessment the client is doing, we need to perform some tests to make sure that this assessment is reasonable. So it is a long list of indicators here, and as I said before, it is not impairment indicators not just related to specific asset or specific or PP&E only. It should be done as a central procedure for the audit. We will have a separate video anyway to cover this procedure in detail to see how impairment assessments should be done. But I'm here just giving you like a quick overview about the risk and procedure they need to perform. So as an example, like one of the internal indicators is the operating performance. So the company says that they have experienced a steady revenue growth over the past 3 years. So also they have profit margins. Their profit margins have remained stable, exceeding industry averages, and their delivery volumes, they are e-commerce by the way, so their delivery volumes have steadily increased, indicating efficient asset utilization. So these are the management's claims. So what we need to do in order to make sure that these are reasonable, so what we just need to analyze the revenue, profit margins, delivery volumes, trends over the past 3 years using actual data, and make sure to benchmark this against external reports. And also we need to maybe review capacity utilization analysis for key assets categories to assess efficient asset usage. and then we need to refer where we have done this analysis, because it is not like a simple one. You need to have a separate working paper to document this. That's why I'm saying that impairment indicators assessment is a long testing that needs to have a separate video for it. So I'm just giving you an example of the procedures that we're doing here. So that's an example of the internal indicators. Let's look at one example of the external indicators. So as an example for the market prices and transactions, they are saying that recent acquisition of similar delivery companies has shown stable or even increasing asset values, suggesting a healthy market for the company's type of assets. So in order for us to ensure the reasonableness of this claim by the company, we have analyzed transactions multiples from recent acquisitions of comparable delivery companies. This information should be available maybe through investment banks or analysts' reports online, and then we have benchmarked the company's asset values to those implied in the comparable transactions, and this has been recorded in blah blah blah, or whatever the working paper that you are referring to. And then we need to add the conclusion here. So the client concluded that there are no indicators for impairment, and then we need to document our conclusion as well, whether this is reasonable or not. So as you can see, there's a long list of procedures that we need to do. We will have a separate video to cover this one. By this, we have covered all the risks and procedures that we need to do in this working paper. Obviously, again, as I say in every video, this is just a guidance. Risk of material misstatement depends only on your risk assessment. So in your case, you might identify more risks than this, and in some cases you might just identify some of these. So it depends on your risk assessment procedures and planning procedures. I'm just giving you the common risks that most probably you will find in most of the companies and how to address them. Well, so that's a wrap up for today's video. I hope that you gain some good insights out of this video that will help you perform more effective and efficient audits going forward. If you like this video, please make sure to hit the like button and don't miss out, and subscribe to this channel to see all the videos that will come soon. Make sure to leave a comment on this video on what you want to see going forward on this channel, and what is your thoughts about today's video. Until then, please enjoy your audits.